it's Jenny Fay with Real Estate One, and I'm here with Ben Williams. And we are going to talk basically about people don't know what they don't know, especially with interest rates. So, Ben, you've had some interesting situations lately, and people don't understand.
With the way the market's been and everything, you always see the headlines of interest rates are at 7 or interest rates are 7.5. Those are average. That's an average interest rate. Now, the interest rate is really individually specific and property specific as well. The interest rate is affected by your FICO score and the property that you're buying. So if you have, say, a sub 720 credit score, then your credit score will be affected by the loan level price adjustment. And so you typically get hit with higher points on your interest rate because your score is a little bit lower than the very good or above average. Yeah, exactly. Now the property also has a significant impact on it too. Say for instance, you're looking at buying a manufactured home or a mobile home. Those properties typically demand a higher interest rate because of their appreciation factor and a lot of other things that are involved, but they don't hold their value as well as a stick-built home does.
That's true.
So you're going to see the properties like that receive a higher interest rate. So if you have a lower credit score, below 720, and a manufactured home, your credit or your interest rate will not be what the average interest rate is of say 7%. It's going to be a little bit higher.
Right. And that's good for people to know because, they get upset thinking, well, somebody's trying to win one over on me because they're charging me a higher interest rate than what I'm hearing. So just know that your loan officer, hopefully it's Ben because he's awesome, but your loan officer is going to get you the very best that he can. And because he wants you happy and he wants you in that house and so on. So obviously the best rates, your average rates are going to be credit scores above 720 and buying a stick-built house. That's going to be your best bet.
And that's what it really boils down to in the long run too. So the better of a credit risk you are to the lender, meaning you got a really good score and you have your liquid assets and investments and stuff like that, that makes you a better credit risk than somebody who is doesn't have that above average credit score and stuff. So get with your financial professional, your loan officer and everything, and they'll walk you through the process and how these different factors will affect your interest rate and your loan application. So when you're out looking for a home, get with a lender first and get squared away so you know exactly what you want. And your realtor would absolutely love you for doing that, so they know exactly what your budget is, what you can get, what you can afford, and what they need to work in the contract for you when it comes to the loan as well.
That's right. All right. Well, thank you, Ben. I think that's very good advice for people. If you have any questions, contact Ben. What is your phone number?
My telephone number is area code 231-632-7888. You can also reach me via email at bwilliams, that's Bravo Williams, at johnadamsmortgage.com. bwilliams@johnadamsmortgage.com.
Perfect. All right. And you can always reach me, Jenny Fay, at 231-360-7822. You talk, I listen. Talk to you soon.